Hello and welcome to our Tax Control Framework videocast. My name is Fadi Ramadan. I'm the Solution Lead Partner based in Hamburg, Germany. In this video today, I would like to give you an overview of the Tax Control Framework approach, background information, the need and the advantages in this connection. Companies across the globe face an increasingly complex legal and regulatory environment. Obligations around issues like compliance, transparency and taxation are continually evolving. There are a number of international regulations in this context. For example, the COSO framework or the OECD guideline for building a better tax control framework. On the other hand, the several countries have own regulations from the national view, and all these regulations need to be fulfilled to be compliant at the end of the day. At the same time, the risk of things getting wrong and the penalties for doing so are becoming greater. Not only for the companies, for the executive board as well. If there's a failure in the compliance, it's often that the CEO or other members of the executive board that is held privately liable. In this connection, there are fines and in the worst case, maybe jail sentences as well. Taxation is one of the key areas where the compliance burden is growing every year. We observe a more aggressive approach by the tax authorities, for example. The governments try to reduce the non-compliance. They want to punish tax evasions. So how can businesses and CEOs reduce these risks and ensure tax compliance is as accurate, straightforward, and transparent as possible? For a growing number of companies, the answer is a tax control framework. A tax control framework is a set of documentations, processes, risk procedures that risks are known in the organization and under control. On the other hand, it is an environment and infrastructure of all internal and external regulations from the tax perspective. A tax control framework typically focuses on 7 key areas. The 7 key areas are the culture, the objective, the organization, risk, program, communication, and monitoring and improvement. All these 7 areas need to be fulfilled to be compliant. So by reviewing, assessing, and analyzing these 7 key areas, it's possible to establish a structured framework to reach that the tax matters are under control. A tax control framework enables everyone in the organization to understand the tax-related processes and the responsibilities. Not only the responsibilities in the tax department or in the finance department. Tax processes are all around the organization, and in all departments are tax-related issues. In the end of the day, the tax control framework ensures that the company has an overview of all risks in the organization, transparent processes, documentations to reduce the tax-related risks. And what are the benefits of a tax control framework? Why companies need to establish that? The TCF is an evidence, a protection for the company and the management board as well. And in this context, the company can avoid fines, penalties, criminal tax proceedings. They can build a trustful relationship, on the one hand in the organization with all departments across and around the tax department, but a trustful relationship with the tax authorities as well. Last but not least, the tax control framework and the transparency of the documentations and the processes is the basis for the next level in the processes. It's the basis for the digitalization and automation of the processes in the future as well. So it's not hard to see why so many national and international organized companies use a tax control framework as a solution to manage the tax issues, to mitigate the risks and protect the company. If you would like to understand more about tax control framework, about the approach, and especially about the 7 key areas I described before, please follow our next video in this video session. Thank you very much for the moment and take care.